Hi everyone, so today is the 23rd of April. We are now approaching 40 minutes into the US session. I'm here looking at the S&P 500. I'm also going to be taking a quick look at the E-mini S&P as well, just to see what that June contract's doing in terms of volume. But just to recap, you'll recall from my video in March that I was extremely bearish from this point here, from this point here, and right up to sort of 650. I was calling for this to come down another 1,000 points, 800 points. I was expecting really to see levels like 800 or thereabouts. Now, fundamentally, I still believe the market is it's not due a drop. It has to drop to reflect what the actual underlying fundamentals are. It can't carry on doing what it's doing right now. Now, fair enough, markets can stay irrational for a very long time, and that could be for years. But at some point, we're going to see some pullback into, if anything now, the panic might settle at sort of 6,600. The 6,600, 6,500 might be that downside. But if we settle at that, and I'm going to show you the volume profiles later, if we settle at this 6,600 mark, there may be further panic to the downside from there. So right now, I'm still hoping to see something around the 6,650 mark for the SPX to come down by this kind of 400 or 500 points at least. Um, so the pullback is, as far as I'm concerned, inevitable, and there's other reasons behind that. So over here we have something called a call wall, and this is essentially where option dealers, the market makers, are protecting their upside exposure. So just think about it. If you had a positive view on the market, you wanted to get some leverage, you're likely to buy a call option, or institutions are buying call options. With the strike price, we could see a lot of open interest at 7,200, right? So what's happened over the past few weeks or days or weeks? The institutions, retail traders, they've bought 7,200 call options. There's a lot of concentration at that level right now, and the market makers, as you know, they sell those options, so they are short on those options, whereas us buying those calls, we're long. And they then have to hedge anything above that because they are not direction motivated. They're motivated by the spread. So they're going to protect anything above that. And the way they protect it is by selling into the market. When they sell into the market, that naturally has a downward effect. And that results in this kind of downward movement. So the call wall, I've highlighted the whole area where there is quite a few call walls at various degrees. The heaviest is the 7200, but there's one at 7130, there's one at 7150-ish, and that's essentially going to act as resistance. So when you see resistance lines, you now know why those resistant lines exist. It's not just simply buyers and sellers on a self-fulfilling prophecy. This is actually market makers in the background hedging their exposures and putting a lot of liquidity into the market at those key levels. But anyway, the point is, here's the one resistance. If we get through this, and I'm going to look at the possibility of that happening when we look at the volume profiles on the E-mini contract, and as soon as we start getting to this level, I don't think we're going to breach 7,200 on the S&P. I don't think it can happen because of I think from the numbers, it was something like, what's the exposure there? There's about 7.3 billion over there. So not too concerned about going above 7,200. But of course, that can change. If Nvidia's news is just crazy good and the sentiment just changes and Iran and America are best of mates, then, it could go beyond that. But anyway, I doubt it. I doubt it very much. And on the downside, the same principle exists, by the way. But so as soon as we get to this level here, by the way, the biggest call, the put wall is over here at 6,800. However, there's something at this line. If we get below that, okay, it's called the zero gamma area. Okay, if we get below this, so this is the range, this kind of thing that I've tried to make into a gray box. Let's make that a bit more gray if we can. So that area there, that's the range now for at least today and tomorrow. okay, because today and tomorrow also has a lot of concentration in option expiry for 23rd and 24th of April, and then it kind of thins out at that point anyway. So I think for today and tomorrow we're in this area. I don't think we're going to go crazy low below 100 points if it comes off, and I don't think we're going much higher below 7150 if it decides to regain that bullish momentum. Um, but sorry, the point I was coming to is that this is a very interesting area. So I'm also watching it on the other screen as well. 6960 over here. So if we come below that, the acceleration, here's the key word, the acceleration to the downside will be greater. Okay, because the market makers are going to sell before they're buying at this level, right? Because they don't want the price to go that low. They're going to buy above this. So this is what we call the dip area. It's going to, this is the rip. This is the dip. As soon as it comes down here, market makers are going to buy for that too, and the effect would be that the price goes back up, or likely effect is that it goes up. But below this line, as the math stands today, if it goes below that line, the regime flips, market makers then start selling, and it accelerates the losses. So um, that's a point, that's a key area for us, the 6960, and as is this bottom one here at 6800 or thereabouts. Okay, so that's what I think's happening. Let's go into the E-mini S&P. Just look at, so you could see where are the thickest nodes on this. We could see at the current level. So by the way, the S&P, the E-mini has a 30 point or about 25 point premium. So whilst this says kind of like what is the price right now, 7160, the the S&P is 7125, so 35 point premium. That premium seems like a bit above the fair value actually, so there may be some squeeze on that as well. Let me just quickly see what the calculated fair value is. Just give me a moment. Yeah, 34.9. So the calculated fair value is 30. Anyway, we're in a nothing's broken. I thought something was not right. And we can see the biggest volume node here being 7145. So it's unlikely we're going to start trading into this area. The volume's a little bit thin. Let's see how this looks on a 30-minute chart. Again, thinning volume. If we start seeing things come to 7178 and coming into this zone, in other words, S&P equivalent of 7143 or thereabouts. Remember those gamma walls I was talking about? Um, so we'll see that pull back again. So I don't think we're going to go above this mark here today. So today's cap on the ES likely to be 7180 or thereabouts. Now let's see the downside. What we look, again, thinning volume on the downside, lots of space for this to fall. Now I want to see the 4-hour chart to see how confident I am in that downward air pocket. So can you see how this now relates? We've got a couple of things going on. So this is the 20 moving average. Let's turn that to a 50. It's probably, I'm going to go to a 50 now. I do like the 20, but can you see on the price above the 50 moving average is starting to now cave in as well. So that's positive. We have that that call wall over here at 7150, which is about there. So obviously 7184 or thereabouts here on the ES, but on the SPX is 7150. And then so we've got strong resistance forming. In other words, price today likely to come down to 7102 on the ES, be tested maybe in the evening around 7050, 7060, and then hopefully at some point after options expiry tomorrow, we start seeing this crucial level over here where you can see there's very little volume. So it's going to come down through that. That's the key level here, 6960. That's what I call the air pocket. That is what we have where we have zero gamma. The market makers are not exposed uh, to to gamma, but 7 it will be 6961 actually now. It's changed a bit. So there you have it, everyone. I'm going to make this channel better. I'm still getting to learn how to upload videos and do all this stuff, but uh, I keep this raw. But if you if you subscribe, it gives me an indication that there is some interest out there, and it encourages me to voice my thoughts as well. It helps my trading, so I'm going to carry on doing it anyway. But it'll be nice if we get some interest drummed out there. And tell me what you want to see. Is there anything you want me to test in real time? I can do that. All right. Thank you. Bye bye.